Welcome to Grow Money Business, the podcast dedicated to helping business owners grow both their wealth and business on their own terms. Here's your host, Grant Bledsoe.
Hello, everybody. Grant Bledsoe here. Welcome back to Grow Money Business. My guest on the podcast this week is Gannon. Ann is the principal and founder of the Largo Group, which is an East Coast-based accounting and tax firm specializing in small businesses and restaurants. She's also a former professional golfer. We had a great conversation today and talked about how small businesses can use financial data that they have at their fingertips but may not be aware of to guide business decision-making and success long-term, and helped guide a bunch of restaurants through the COVID pandemic in 2020 and 2021, and has seen a whole lot of both successes and failures throughout that time. And it was great to chat with her about her perspective now that we're maybe a year removed or 2 years removed from the beginning where all restaurant revenue went to zero and business owners in that industry were having a very hard time staying afloat. So she has a lot of wisdom in this space, and we had a great conversation. I hope you enjoyed as much as I did. Hey everyone, I need to interject quickly to remind you all that nothing found in today's episode or any other episode of Grow Money Business should be considered financial, investing, legal, tax, fitness, or even relationship advice. It's content that you're free to use and to deploy on your own terms. And before taking any actions on content found on the show, please do consult with your tax professional, your attorney, or your financial planner. If you don't have a financial planner, head on over to threeoakswealth.com to learn more about what we do in terms of financial planning and investments and how we help clients on an ongoing basis. All right. Ann Gannon, welcome to the podcast. Thanks for being here.
Yes, thank you so much for having me. I'm excited to talk with you.
I'm excited to talk with you as well. Why don't we start here? Would you mind introducing yourself and the Largo Group?
Yes, so my name is Ann Gannon. I'm the founder of the Largo Group, and we specialize in monthly accounting and tax services for small businesses. We work a lot with restaurants, and really, our model is that we want to make sure all of our clients have better information every week that makes them better business owners.
Hearing you describe that approach is very refreshing because we work with a lot of small businesses and business owners in our practice, and a lot of times, we're helping them make cash flow decisions in the business. And it's like, okay, why don't you pull your P&L from the last month or the last 3 months? And they'll come back and they'll say, well, my bookkeeper, my accountant, they haven't done any bookkeeping yet. And it's like July. I'm like, well, how do you make any decisions with that, right?
Yeah.
So when I hear you describe it that way, it's more consistent, it's more proactive, right? As opposed to, well, just send me your stuff at the end of the year and I'll produce the returns. That gives you no insight into how to run your business.
Exactly. And our model, pre-COVID, we were monthly accounting, just a monthly report, and, it worked. It was fine. And then I think the big lesson of 2020 was, first, comparing this month to last month is irrelevant because so much has changed. And if I'm looking at March 2020, it really doesn't matter what happened in February because the world has changed. And the other thing is it's too long to wait, right? A month of data about your business is hard to break down because the numbers are bigger and there's more that happens and there's one-offs, but also waiting 30 days to look again is just too long, right? You really, as a business owner, have to have some information about what's happening in your business every week. So that way you have 4 opportunities to change every month instead of just waiting until that month end report and looking at things that happened 45 days ago. So our model shifted completely during COVID. We went all into a weekly accounting model to where we provide our clients weekly information. Now, it might not be perfect if your manager didn't upload invoices or, there was something that happened and we need to dig in deeper, but at least you have a starting point to then ask better questions every week and really understand what's going on in your business today so you can make the best decisions.
Yeah, absolutely. And this is kind of an industry-specific thing. A lot of our clients are in the professional services. I would say, we don't really need to do like maybe every single week because the transactions are fewer and larger in size in that kind of industry. When you're running a restaurant, you have a whole bunch of transactions of smaller value. I can see where that would be very important there.
Yeah. But I would also say, I think even if even if at a minimum, one thing we really recommend to our clients is Cashflow. So we have a great worksheet that we give out for free to anyone interested that really is about checking your cash flow daily. So even if you are professional services, I would agree that, your transactions might just be monthly, your rent and your merchant fees or whatever it is. But I think looking at your cash flow over the span of a week to 2 weeks to really see how much it changed throughout the month. Because I think a lot of times what happens for the entrepreneur, because we're optimistic and we want to see things that are, hey, what's great month? Like, oh, one more sale and I'll get there is that really what's happening in my cash flow, right? Like I have all these projections of what I think my P&L is going to look like at the end of the month, but am I actually getting there? And really, what am I earning cash dollars in hand at the end of the month? And I believe that starts with checking your cash balance every day.
Absolutely. Could not agree more. That's where the rubber hits the road. So how do you give us a framework then? How do you think about handling cash flow? How do you suggest business owners review their position and then make decisions on that?
I mean, the first thing is, like you mentioned, that it's something that the business owner has to do, right? So you might have an accounting team, you might have a bookkeeper, you might have a CPA. All of those people are great and they are going to do their part with your bank balance or whatever it is on the accounting side. But as a business owner, you still have the responsibility to look at your cash balance because if nothing else, it's also a great control. I mean, so many times I hear horror stories of I didn't realize my bookkeeper was taking money, or I didn't realize deposits weren't going in, or I never billed this person. I thought I did. It showed paid, but it actually wasn't paid. So fundamentally, as the owner, I think you have a responsibility to look at your bank balance. Maybe it's not every day, but at least a couple of times a week, and tracking the balance every day is important to make sure that you agree with the transactions that you see. And looking at 1 week of transactions is a lot easier than a month of transactions because in this digital world, right, fraud happens. I mean, I've seen things on our company's bank statement that shouldn't be there, right? They just aren't right. And if we are looking periodically throughout the week, we could also make sure that we're in agreement with what's happened in our bank account.
Right, right. So that's a good baseline. And I suspect the next step is reviewing balances and transactions and then forecasting, well, what kind of cash do you have coming in and coming out into the future? Right.
Yes.
So how do you
Yes.
think about that?
So again, I mean, I like a weekly just because I think even if you're breaking down your rent 4 times, right? Dividing it by 4 or some of those fixed costs. I think it's good to have an understanding of the cash that you need to bring in every week to make your business work. The second piece, especially for people in professional services or service industry, is how much of the cash that you're collecting is a deposit on future work versus money that's actually earned. Because fundamentally, I think we need to know how much do we need to earn on the revenue side every week to make not just our business work, but our life work, right? Like, how much do you want to make out of this business every week? And then I think with that, that can really help drive us prioritizing the jobs that work versus that don't work. Because so many times in professional services, your time is your most valuable asset. And there's only so much of you. So we want to make sure that we're setting that target so you understand, hey, I need to go after this job because otherwise I'm not going to hit my weekly revenue target and then I'm behind for the month.
Right, right. That's usually what we suggest too, is work backwards from, what are we really trying to do here? Are you trying to work 20 hours a week and then delegate the rest and make, enough to play golf and coach t-ball and all that stuff? Or are you really trying to ring the bell? You're comfortable working 50 or 60 hours a week and we're just trying to make money at all costs. And
Yes.
from those, objectives, those visions, you just work backward into staffing and revenue model and all the other bits and pieces that come along with that.
Exactly. And I think so many times as entrepreneurs, we forget how important it is to pay ourselves consistently, that because that's so much of the struggle that you see is someone who's not paying themselves but maybe paying their employees, or just really sacrificing everything, and then that's when burnout happens, when I think it has to be included in the model from day one, because why should you work for free, right? It's not helping anyone. So I think that's really important to consider as part of the equation.
Yeah, yeah, yeah. So I want to ask you about when you should take cash out of the business and pay yourself, but I want to. I don't feel like we're quite there yet because we're talking about reviewing transactions a couple times a week, making sure that we agree with all of them, and then looking at cash coming into the accounts and going out of the accounts, our expectations for that over the subsequent week or 2 weeks or months, just to make sure that our balance is appropriate. It seems like that would require a lot of systemization, right? I mean, if you're if it, how do you know exactly what cash is going to come out of the accounts 2 weeks down the road?
So I think it really starts with a budget, setting a monthly budget or weekly budget, depending on which seems to fit your eye better. But I think it starts with a monthly budget that's realistic. So, what are your true operating costs? A lot of times, especially in service business, but really any business at this point, we forget about software costs, right? So, if I'm billing $10,000 a week, what am I charged to process those transactions? Making sure that's part of my equation because that could inherently be some of my cash difference that I'm seeing
Hmm.
is, I only get 8,000 of the 10,000 or whatever that is. And, I think working down to my utilities, my dues and subscriptions, what if I'm in a program or taking courses, all of those, as well as, materials, marketing, all the way down the line to my net income, and setting those targets is really the best place to start because then if you take 30 days of data, right, forget the bookkeeper because obviously yes they could do this for you, but I think it's a really good exercise for a business owner if you've never done this yourself, because if anything you're checking what they're showing you because you're really checking to make sure what they're showing you includes everything, and the only way you're going to do that is by spot checking through this exercise. So do a budget, then literally go through your bank account, credit card account, and put all of those expenses that you see in those buckets. Is that advertising? Is that software costs? All of those things down to net income. We have everything. What does it work out to be? And that is our baseline to setting targets moving forward. Because if it works out to break even and we want to make 2,000 a month, okay, well, we either need more revenue or we have to do something about our expenses. But at least now we're starting to trust the numbers. Because as great as it is to have an accountant, and trust me, that's what we do. So I don't want people to not have us. You have to trust what we do. And the only way for you to trust what we do is for you to work through it yourself first and understand where the information is coming from.
Yeah, yeah, totally. And it can be kind of a time-consuming task, but not only are you verifying somebody else's work, you're giving yourself a more intimate understanding of what's going on. And that you have to have a pretty intimate understanding of what's going on to make sound business decisions going forward. And it all starts from there. The way that I do it, at least, is our bookkeeper categorizes all the transactions for us, and then I have this really ornate, elaborate spreadsheet that I've built over like the last 8 years that has all the accounts that would show up on our P&L, and then month by month, just a forecast of what we're expecting for revenue and across all the expenses. And
Yeah.
some of them we have, I mean, we're professional services. We have a lot of software costs that we pay for monthly. That's pretty easy to forecast. Some of the other stuff might only show up once a year. And so we have a way to add them and make sure that our cash balances are in line with expectations and what we really need, what I'm looking to do with the business. But that's time consuming too. Have you found better ways to do it? And I just do it, like I say, on an Excel spreadsheet. Are there better tools than that to track this kind of thing?
So I think you're right, right? Like I have mine in a Google sheet, but similar in that, what I like to think of that, whether it's Excel or Google or whatever, it's sort of like your sandbox. And I think as great as software is usually taking what it knows and either working backwards or, taking an average and working forward. But it doesn't have that intuitive knowledge of, well, October is always bigger. For us, October is always bigger software expense because I'm filing a lot of tax returns, right? The software is never going to be able to figure that out. So I do think it's important as a business owner to spend that time, but maybe it's something that you do quarterly, right? Like I'm going to revisit my budget quarterly, but I'm still going to look for accountability purposes at my P&L weekly or monthly. So I think that time is valuable because what you're looking for are the things that you're not aware of. And I think what I see so much now is the software costs have gone up, your labor costs have gone up. So what we really want to make sure of is our pricing makes sense. And until you, the owner, do that exercise, you're really the only one who's going to know, no, that's a one off. It's okay. It was a surprise, but it's not going to be there every month. Or no, like my software cost really has gone up that much in the last, 6 months or a year.
Right, right. So one of the, I would think the number one question that we get when we start working with a business owner, and let's take a simple example like a sole proprietorship or a single member LLC, where all your revenues and expenses show up on your own Schedule C. You don't have to pay yourself a W-2 wage. You don't have to file a return for the organization. Somebody will come in and they say, yeah, I feel like I'm doing pretty good. I have all this cash in the bank. I don't know what to do with it. Well, should I pay myself? Should I take it out and pay myself? I have expenses. Maybe I'm like racking up credit card debt because I don't know when to take money out of the business account and pay myself. How do you think about that? When should business owners pay themselves? And it's a huge difference between an S corporation or C corporation and a pass-through entity like an LLC or a sole proprietorship. Why don't we start with the sole proprietorship example?
Yeah, I mean, I really think across the board, one of the biggest lessons of COVID, and again, in our view, I mean, we're 90% restaurants, and overnight, every single one of our clients had a failing business because who knew when people were going to be able to come back? So I think the biggest eye opener for me as someone who deals a lot with restaurants from the accounting side is how many people didn't have a plan B, right? That the idea was the money's in the bank or in the bank for the business. I'm kind of rolling the dice. I'm working on a second location, a third location. Like all of this is great. And it just churns. And I live a great lifestyle. I get to travel when I want. I'm on Amex points. Like all of that was great until COVID happened, right? And
Yeah.
then all of a sudden, that cash is not coming out of the bank anytime soon, right? Because you have payables, you have a whole payroll was still due because of
Hmm.
the cycle of it. I mean, you had tips that had to be paid out. I mean, crazy stuff from Cashflow to where all of a sudden your business is in jeopardy. And you look back at those good years and think the mindset was so needs to be fixed, right? I wouldn't say it was wrong because who would have thought, but the mindset of every business owner needs to be fixed to say every dollar that you choose to leave in the business, you at least need to be aware of the fact that you are deciding to leave that money in the business. So if you're a single member LLC and you show $50,000 on your return at the end of the year, then in theory, you should have the option to move $50,000 off into your personal account because you are paying taxes on that money. And if you turn and say, well, I don't actually have $50,000, then that's also something that we need to be aware of, whether it's leveraged and there's a lot of debt, whatever it is, being aware of what that tax return shows should in theory be money in your personal account, and you should have the confidence that the business is going to earn 50,000 next year, right? And if you don't, then that's also something that we need to think about because at the end of the day, this business is probably your biggest asset. But if you're not taking money off the table and building other assets, you're truly putting your future at risk. And I've seen it so many times where, 10, 15, 20 years later, someone goes to try to sell their business and they're crushed by the fact that someone else doesn't see the value. And you think, well, how could they see the value if you don't have cash and all this to show for it?
which is the experience for about 99% of people who put their business for sale, right? We all,
Yes.
right? I mean,
Unfortunately, yes.
you build this thing to your specifications to fit your lifestyle over a 10, 20 or whatever time span. You know all the nooks and crannies. Somebody else is going to look at it in terms of what they're going to be able to pull out of it and the cash flow it's going to produce once they take over. They don't
Right.
they don't see it the same way you do, and it's yeah, it's a big deal. And especially for your clients, restaurants are hard to transition to other owners, right? It's a hard thing to build equity in those things, right?
Yes. Well, I would say it doesn't have to be. I mean, I think that was, again, one the biggest lesson was you have to find a way to show value of your business right now, right? Waiting 5 years to show that is not something that's going to serve anyone. And it definitely not serve the next buyer. But if you think of it like children, so many times the biggest hangup in our business being scalable or repeatable or sellable
Yeah.
is the owner, right? Because everyone says, "Oh, well, Joe will do it because that's what Joe does, and everybody loves Joe, and they're coming in to see Joe." Well, that's great until you try to sell Joe's business and you tell the new owner that Joe's not going to be here. So,
Yeah,
if
that's right.
anything, you're sort of hindering your future success on the fact that you want that this business relies on you. Where if you look at the big chains, I mean, you go into Wendy's and you're not surprised that Dave's not there, right? You're still just going to get your burger. So, I challenge a lot of business owners to think about that, because as much as you love being there and being, the center of the wheel, is that really hurting your business long term and even hurting your employees' growth? Because if you have a manager, that manager should be allowed to manage and be their own person. And all of that will help you in the end, because you're so right on transition. How can you ever expect someone else to come in and fill your shoes if you're the only one who can do all of these things?
Right. Right. Everybody comes in to see Joe. Well, Joe's not here. Here's Mike.
Right? It's like, what? No.
What? That's not the deal. Uh, so looking back on March, April, May, June of 2020, you've got all these clients that you're helping with accounting and business consulting, tax, and they're in an industry where revenues just went straight to zero almost overnight, right? Looking back on that now, how do you help people through that? How did your clients wind up?
Yeah, I mean, I think, I had been the a daughter of an entrepreneur. That's sort of where I'd always had a passion for helping small businesses. My dad had a business when I was growing up, and his business failed. And so I remember how much that was crushing to him, to his dreams. And when COVID happened to me, it was so real, because I knew the other side of that, that I think we very quickly as a company decided we're not sitting back, right? There were a lot of accountants who kind of said, well, we don't know what to do, so we're just going to wait. We're going to wait for guidance. That was not us. I said, we are in it with these people, and we are going to make sure that we get as many of them out of this as we can. So we right away transition to a weekly accounting model. I mean, I was literally like Googling, how do I pull a weekly report out of QuickBooks and like make it look somewhat pretty, or what can I do? Because a month was too long to wait. Like, and also I look ridiculous sending, hey, here's your March 2020 financials. Do you want to talk about it? Like,
Yeah.
no, I mean, that's so tone deaf, right? So
Right.
right away we shifted our whole model to weekly, to if you want to call, we will do a call. We did 30-minute consultations for like a year and a half. Anyone who needs help, if you're a client of ours or not, we are going to talk you through it. And it instantly shifted to cash flow, right? P&L doesn't make any sense, but what we
Right.
need to know is revenue you need to bring in to make your model work. And that was the conversation we had for the next 12 months with everyone. Like, okay, if you're 50% down, is that enough? If it's not, are you keeping your management team? Are you not? If you are, how do we replace that revenue? And, it was really just having an open mind. And I think the clients that were able to really look at it and without emotion, which was incredibly hard, right? Because who would have ever thought that we were having these conversations? But the ones that were able to kind of get rid of the emotions and just look at it were also the ones that were able to make really good decisions about what they needed to do to replace that revenue. And it was amazing to see the fight. I mean, I had people pulling out hot dog carts and like, I'm going to go park my food truck by a Walmart. Like, I mean, they were amazing. I mean, truly, I was so inspired by every story of the fight that was in these entrepreneurs. And, it really taught, I think, everyone a lesson of like, you don't even know what you're capable of until you look down the bottleneck of those few months.
I just love hearing stories about unique ways that people have, used human ingenuity to deal with adversity. I mean, that's so enlightening to hear, and I expect that having so many of those 30-minute consults about weekly cash flow, you become an expert in the Paycheck Protection Program along the way too.
Yes.
Right?
Yeah, but what was so interesting was you had people who had a really good gut instinct, because when PPP first came out, I mean, I was one who was like, this thing's going to be over in like a month. Like, there's no way we're going to stay shut down. I mean, summer will be fine, right? And there were a lot of people who were told, well, you have to spend it in 8 weeks. And that really hurt, I think, some businesses, because a lot of our clients had the gut of like, I don't know that this is going to be over in 8 weeks. Like, I don't know. I have to make decisions that get my business through this. And I think those are the ones that really followed their gut and knew, like, okay, if I just pay everybody on my staff to stay home in 8 weeks, that's not really helping anyone. That I have to put my business first and really make sure that I have a job for them to come back to. Because if I just end up closing because I burned through this money, that's not serving anyone. And then what was so funny is, 3 weeks in, they all of a sudden change it to, 20 weeks or 24 weeks or whatever it was. And those guys were the ones that were like, hey, I really do have a gut instinct here, and I need to trust it, because I need to think with the future business in mind, that I want to be here a year from now or 2 years from now. And I think those are the ones that in a weird way gained confidence to say, like, you are the leader of this team, and you need to be the one who's, making that call to put us into battle.
Yeah. And for context for our listeners out there, if you think back to March and April of 2020, we had all these businesses that were at risk of failure. The federal government threw a whole bunch of stimulus at the system, and the Paycheck Protection Program was a big part of that. And because there was so much demand for it, the loans were routed through the Small Business Administration, which has a head count of, I can't remember what the number was, but there is
I know.
absolutely no way in hell that organization is going to be able to get these loans out to the businesses that need them, right? So the SBA had to rely on the banking system to distribute these loans, and they're structured as loans where if you check a couple of boxes, you retain staff and use the money within 8 weeks or whatever, they're forgiven tax-free. And so it was a great lifeline for a lot of businesses. But you had to get them through a bank that was enrolled in the program. And there was this huge bottleneck of thousands and thousands of businesses trying to obtain these loans, but they didn't have a pre-existing relationship with the banker who could process an application. And so the first batch of these things had relatively rigid rules where if you're able to get your foot in the door and get some of this money, you've got to use the cash in an 8-week period. And then they had like a second batch of it. I think it was maybe May. Does that sound right, Ann?
Yeah.
In May, to where they relaxed some of the rules, gave people a couple
Yeah.
more options. And whereas a lot of people who thought that they had just missed out entirely on the first batch, now they were able to get the same money on the same terms, or the same money on slightly looser terms. And the people who got cash in the first batch were, pulling their hair out because they had to use it in the first 8 weeks. And so it was this kind of a cluster of activity. And there's been a lot of criticism about the program nationally, because you hear these stories about people taking out the loans and going and buying Ferraris and having them forgiven and all that. And there's absolutely a lot of fraud out there. But I think this is actually a pretty good piece of legislation. Aside from, we're injecting a whole bunch of money into the system, adding to the federal debt and all that, that part of it aside, I think that they did a pretty good job of getting the money in the hands of businesses in short order, because that is a huge task that the system was not ready for. And I'm curious to hear your thoughts on that after a couple of years.
I would agree with you. I mean, I think for all of the, Monday morning quarterbacking that's going to happen, it in a million years, I don't know that you could have found a better way to get as much money into the hands of business owners as they did, as quickly as they did. Because what people don't realize, and now not every industry was as impacted as hospitality, but if you look at hospitality, I mean, March 13th, no customers, right? Like, never happened in the history of hospitality that no customers pretty much anywhere in the country. Revenue goes to zero. Most of them aren't set up on DoorDash and Uber Eats. That was still pretty new back then.
Mm-hmm.
We had a few that were sort of trailblazers, but most of them, to tell them that they needed to go put themselves on Uber Eats was like, I don't even know why I would do that. What are you talking about? Like, no, especially for the independents, right? The chains are different, but you're independent. He has no idea what you're talking about on March 13th. On March 13th, he or she still has a full payroll that in most cases includes tips. So not only does his revenue go to zero, he still owes 2 weeks of wages and probably most of his accounts payable because he's also on 2 weeks to 30-day terms. So zero in, his cash is gone, right? I mean, you're looking at 100,000, 150,000 that he now owes with zero coming in the door. I mean, at that time, probably by, I think it was like March 15th, we did our first webinar to just get people talking because they were so panicked. Because what do you do? I mean, I don't have $100,000 in my bank. In most cases in hospitality, they maybe had like one payroll if they're lucky on their cash reserves, but most of them didn't because they just relied on growth and whatever it was. And when we did our first webinar, I think it was like March 15th or March 17th, we started to kind of get like a grassroots following of just, let's talk about it. Let's brainstorm. Like, this is all brand new, but let's put it on a Zoom and just figure it out. By the time we did it weekly. By the time we did our third, our attendance in the webinar went down. And a friend of mine, and we were doing the webinar together, he said, it's because most restaurants don't have more than 2 weeks of a cash reserve. That most of the people who have dropped off have closed.
Wow.
And they still had another 3 weeks before the first PPP hit their bank account. So if you think about how scary that was, which hospitality is the biggest employer in the US, I mean, they were in such dire straits that for all of the problems with PPP, and I agree, I mean, it got, a little crazy and owners were allowed to go on payroll. And yes, I mean, it fundamentally for some of them worked out in their favor, but it only worked out in the favor for the ones that had the fight because so many of them never made it to that 5 weeks. And so I think what you see is the ones that were able to adapt. But if you could imagine that their life is at risk here, I mean, they don't have a plan B. They don't have, I'll just go work somewhere and that'll be fine. I mean, they've leveraged themselves. They have personal guarantees on 10-year leases. I mean, this is a real deal. And I think they had to do something because people weren't going to come back in the door anytime soon. It wasn't like you could just turn the lights back on and say, oh, it's okay, you can go out and eat now. Like, you fundamentally shattered an industry and you needed to give them, this lifeline. Otherwise, I think it would have been a huge hit to the US economy.
Right. Back to your example of you got 50 grand left over at the end of the year. We need to make sure you actually have the cash there. Let's say that you're in that situation. You have 50 grand left over at the end of the year. You're a single member LLC or a sole proprietor. You don't really, take draws out of the company bank account ordinarily. How do you decide how much of that 50 grand to take out and pay yourself with?
I mean, I would say the lesson of COVID is you client need to argue to me why it's not 100%, right? Because had you done 100% 10 years before, you would have been in a much different situation sitting there in March 2020. So if it's not 100%, I think there really needs to be a plan for when it becomes 100%, because the business needs to have its own cash reserves, right? But fundamentally, the owner needs to, whatever it shows on that bottom line really is the owner's investment. So if you're deciding strategically, I'm only taking 30 because I'm building up the cash reserves, then that's okay. But you need to see that as you are putting money in to that investment. So you are now putting 20,000 in and then build a plan for when you get that 20,000 back, or at least keep track of the money that you're deciding to leave in for whatever purpose. But I just think it's so important that business owners look at that tax return and that number means something.
Yes, it absolutely does. The way we kind of think about it here is every individual household needs to have an emergency fund. And the size of that emergency fund, we think of it as a function of your monthly living expenses. Maybe 6 months worth of living expenses on the short end. For some people who are super conservative, maybe as much as 24 months. That's kind of few and far between, but most people are like between 6 and 12. The business is the same thing. And you don't, need a year's worth of expenses in the business bank account. That's kind of overkill, in my opinion. But maybe 3 months, maybe 6 months, right, to keep yourself viable. Because the whole idea, the way that I think of it, at least, and I hope you can poke some holes in this, is if you can keep the business open you're staying in the game, and you have the opportunity to build value in your biggest investment. And the returns of that can potentially be a heck of a lot larger than anything we can squeeze out of a diversified mix of public securities. Now, it's hard. There's a whole lot of risk in doing that, more than the public markets. But as far as a wealth building tool, we need to keep some cash in that business just to stay in the game, to give yourself the opportunity if something bad happens. And 3 to 6 months works as a reasonable target for most people, but for some that's overkill too. And I can see in a restaurant that would be a pretty large number.
Yeah, and I think a lot of times what happens in business is, like you said, the cash flow might work for where you are right now, but really keeping in mind the cash flow required to grow, right? Like it's fine, your cash flow, your business model probably even works, otherwise you wouldn't be open. But I think it's being more aware of, are you self-funding growth? If you are, does that make sense? Maybe it does, but if it is, like being aware of, like, okay, I'm putting 100,000 in to whatever my growth is, a new location or a new product or development. Because I think so much of our stress and misunderstanding of where our money should be invested is just, like you said, growth costs money, right? It's a great wealth builder, but it's also a risk.
Yeah.
And so I think looking at it just as you would any investment is really important, so that like, okay, I'm deciding to leave 100,000 in, but I expect 20% return or whatever the return is on that money.
Yeah. It's just hard to be objective with your own business,
I
right?
know.
It's very emotional.
Yes.
So once we have cash flow stability and viability, then we can start worrying about a little bit more about the tax return, right? So what are some easy ways that you see with restaurant owners, at least, where they can pay a little bit less in tax? Do you have any core tax strategies that you see available to a lot of business owners?
Yeah, I think it's being aware of, first of all, aware of that bottom line. Like, really, if you know that bottom line every month, then you can at least start to plan for taxes, right? If you're making 5,000 a month net, then we should figure out, your tax rate and what that works out to quarterly, because a lot of times that's a good place to start. Because otherwise, it's all this surprise when we have a tax liability. But the first baseline is, well, what did we expect our tax liability? Just like a budget, right? So
Hmm.
if we have our budget for the year, bringing that all the way down to taxes is a great place to start. And then I think your tax strategies is really, first on the growth side, right? Because as much as it may seem a risk to invest $100,000 in some growth, there also may be a great write-off. So are you saving, 30% because you're investing in this new location or a new office or whatever it is? So that's really important to think about, especially depending on your tax rate, because that does make the risk bearable in some respects. And then I think it is, just being aware of some of the things you do that do have, tax benefits. Office structure. Are you working from home? Is that something that we can consider? How much of your personal expenses could be business expenses? Your cell phone, do you run it through your business or do you pay for it personally? I think the little things can definitely add up, but the biggest thing I see is, really looking at the investment into your business, because ultimately that has a tax benefit, but you just want to be aware and make sure that you've built a plan to see when that benefit is. Is that a this year benefit? Is it a next year benefit? Because, inherently that's where the surprises come from.
Right. So how did you get into this field initially? You've been pounding rocks for a while now, right?
I
15
know,
years or so?
15 years, yes.
How did you get into it?
Yeah, so I started off I played professional golf for a year. So I grew up a amateur golfer. I was ranked 11th in the country my senior year of college. And so then I played a year professionally, and then got the best advice in the world, because my major had been economics and there's no jobs for economists. But one of my professors had said, really look into accounting, because if you dig into it, if you're fascinated by business, it really is the same thing. You just have a few more rules. And that was great advice. So I went back for my master's in accounting and then took a job at a big accounting firm in Boston after I finished my master's. And what I realized right away is all of my golf background, I had dealt with so many entrepreneurs and, worked in hospitality. And that was really the world that I knew. And corporate accounting was so different because you don't have as much of a relationship with the client. I mean, you're really, working for the corporation being the CPA firm and billable hours and all of that. And what I really realized was it has to be better. There has to be a better way for the small business owner because this way is great for your big corporation, right? For IBM, that works. But if you're, a restaurant owner with 5 locations, this really doesn't serve them because they need more information from the accountant. And if I'm billable hours, I can't pick up the phone and talk to you because I'm going to get in trouble because
Right.
I have to spend the least amount of hours possible to get your job done. So inherently, that just doesn't work. And so I went out on my own and just really took the time. I had 2 little kids at the time, so I took time to really kind of think about what I wanted that model to be. And so really the idea of a more thoughtful approach, which is where Largo comes from, meaning methodical in music, was, if we are talking to you throughout the year, our work will be so much easier when we have to go do the tax return. And you're going to have so much more value add because we've taken the time to trust the numbers first.
Yeah, yeah, yeah. Well, like I said earlier, it is refreshing to hear that kind of approach because when we try to guide clients here, we see the exact opposite pretty frequently, and
Yes.
it's frustrating. It's really frustrating.
They think I'm crazy. The
Yeah,
rest of my field thinks I'm crazy. I
yeah.
mean, we are, right? I mean, weekly accounting is hard, but in 2020, we made the commitment to go weekly, and it is tough, and my staff probably hates it, but uh, but it works, right? And the owner needs the information every week, and I firmly believe that that's what serves the small business owner.
hmm Yeah, yeah, yeah. I hear your sentiment about economics degrees and job. I was an economics major as well, and I took the easy way out and just went back to business school
Right?
instead of trying to choose something.
I know.
So tell me about professional golf. You did the circuit for 1 year. Did you have to obtain a card in order to get on the tour? How does all that work?
Yeah, so I played in college. I had, kind of, we lived in Florida, so I really worked very hard to build up my amateur ranking points because in women's golf, they have a great, amateur circuit every summer and kind of goes through the USAM. So, by my senior year, I had, really good ranking points. And then I turned professional. And, I think what I realized is, my parents didn't have a lot of money growing up and golf was incredibly expensive. So, being pragmatic, it was like, I don't know how this is going to work if I have to go home and wait tables and they're not going home to wait tables. So, there were a little bit of reality there. But what I also realized is, I was kind of driving from golf course to golf course and I was so much more fascinated by business. Like I was listening to CNBC and I'm like talking to all these great entrepreneurs and, I don't really want to talk about the golf swing. So I also realized that there was a little bit of it really wasn't my true love as much as I love playing golf. But I really was always fascinated by business owners and the idea of people who are able to create something from nothing has always really fascinated me. And so what I love about what I do now is just hearing people's stories, like the uniqueness of the independent restaurant owner or the entrepreneur who truly creates something that's never existed before.
I feel the exact same. That's why we focus on it here. I just personally get really fired up about the entrepreneurial process, where you have somebody who's got some idea to bring a good or service to the marketplace in a way that's not currently being offered, and they take a huge risk. They put it all on the line to go do it, and if they're successful, it's mutually beneficial, where the market gets some improvement on what was out there previously and is economically beneficial to the owner. That is just a symbiotic thing that's just music to my ears. And it's a heck of a lot of fun to be a cog in that big wheel in the grand scheme of things.
Yes, I agree. And they're fascinating people because I feel like so many
Yeah.
times the entrepreneur doesn't realize how incredible they are, right? They just like, I just, it's fine. It's nothing. And you're like, what you did is incredible that you had this vision and it came true.
It's interesting that you had exposure to that on the golf circuit. I've a friend advisor who's got a firm similar to ours. He lives in the Midwest, but he played golf in college and then did the professional circuit for a couple of years. And I remember him describing it as, it's an expensive thing to do the circuit and go around and pay all your travel expenses. And so a lot of people will get wealthy individuals to stake them basically and pay the expenses in exchange for some share of, winnings or some kind of arrangement like that. And so he did that for a couple of years and realized that it was tough sledding on the golf tour, and then got back into finance. And then 5 years later, he's got these great relationships with really wealthy people who were some of his
Right.
first clients, and it worked out pretty well.
Yes. Well, and that's what I think is interesting about, I think what I never realized when I left golf and went into business is how similar the mindset is. I sort of, kind of went into accounting and was like, I don't want to dwell on that, too much. I want to be an accountant and known as an accountant. And then when COVID happened, you really started to realize how important mindset is to business owners, because when I would have these conversations, some people just couldn't get past it, right? They couldn't let go the anger or the frustration, and they just could not focus on the current week or next week. Whereas others could, right? They were very much like, well, this is what it is. Like, I see it. And one guy's like, restaurant on every corner. Like, let's go. Like, there's no one else is going to get through this, but I'm going to gain market share. And you realize the difference was mindset, right? Because they were all looking at the same scary time, and you really had the same business model across the board, but some were able to see it and some weren't. And so you just all of a sudden, it was like bringing me back to golf, where it's like, I just hit 2 golf balls in the water. Can I hit the next one on the green? Well, I first have to believe that I'm going to hit the next one on the green, right? And so just being aware of mindset as business owners, because again, I think the detriment of so many entrepreneurs is they don't realize how amazing they are, right? They kind of put themselves down or say, well, I'm just a cook, I'm just a restaurant guy. And like, no, like, you're the owner of a $3 million operation. And if you don't start thinking that way, then are you going to make the best decisions to drive this company forward? Because it doesn't work if you're putting yourself down or discounting your knowledge. And that, goes back to that PPP. The ones who were able to say, I've always trusted my gut and I hear what they're saying and I'm not trying to break any rules, but I am not paying out all this money in 8 weeks. Like, I will have nothing left. And those are the ones who were, 4 weeks in, when the government changes the rules, they said, now 24 weeks makes more sense. Like, now,
Yeah.
now let's go. But the ones who were afraid to trust their gut and doubting themselves were the ones that I think struggled.
And for our listeners, that was that's a monumental decision if you're in that position, because
Yeah.
if you check, right, you have the money in the bank, if you check the boxes and spend it in this 8-week window like they want you to, it will all be forgiven tax free. At that time, the writing and the language was, if you hang on to the cash, then you will have to pay it back,
Yep.
right?
Yeah.
That's a huge change. And so, yeah, you can kind of prognosticate and say, well, they have this new batch coming. They can't apply, the same rules to us as to them. And we think we'll get it, forgiven. That wasn't clear at the time. And
Nobody
so
knew.
nobody knew. I mean, it was very scary for a lot
Yeah.
of people. I mean, and
And
just
that was the thing, and that's where the thing about gut was, that, like, there were people who just said, "Fine, if it's a loan, I'll deal with it. I would rather have a loan than not have money in my bank account right now."
yeah, yeah. You make a really good point about mindset. So I wasn't a professional athlete, but I played baseball, through college and everything.
Oh, that's
And
awesome.
I just remember there are so many lessons from that experience, dealing with adversity, um, positive attitude, teamwork, dealing with the team, growing, fostering team dynamics, being able to adjust your focus based on the moment, right? When you just hit 2 shots in the water and now you've got to land it on the green, or you're, going to be disqualified. That's a big moment. You have to narrow your focus. And so
Yeah.
going from broad to narrow, I just use all those, dealing with adversity. I use all that stuff all the time in my
Yeah.
professional life. What other stuff have you taken from your golf career that's applicable now?
Well, I think it's just that, inner belief. And I think that's what I would tell people, whatever they've done, whether it's golf or baseball, like, you may not have done this before, but you've risen to a challenge before. And I think that's the biggest thing. And also being honest of yourself, of like, being aware of when you when you get to overwhelm, because we all get to overwhelm, right? But what are some of those triggers? Because I feel like in sports, you're so aware of it, right? Especially baseball. I mean, my kids play baseball now, and I'm like, I think golf has pressure. You have like 8 people who are going to yell at you if you mess up. And at least golf, it's just yourself, but you have to find a way. And then that inherently makes you aware of the times that you're like not on your game, my mind just wasn't there. And then I feel like you learn to self-correct. Where in business, sometimes we go years of not being at our peak performance or not being aware, or we just think, it's a bad day, or I just don't feel it. But like, do we hold ourselves to the same standard that we would in sports, or, having to perform? Because even as a business owner in your restaurant on Friday night, you're performing, right? You are that leader, and people expect you to step up. And I think that is a huge correlation that sometimes we miss, that you're in just as important as a role as the guy stepping out, to play first base for the Red Sox or whatever. I mean, it's the same, right? You're performing and you're a leader, and we have to find what works to make us the best leader we can be.
Yeah, that's well put. The eyes are on you in both settings, and you've got to rise to the occasion. I would push back on the pressure thing between golf and baseball, though, because in baseball, yes, you let down an entire team behind you if you don't perform, but you can get yanked too. And I was a pitcher, and I was mediocre at best, so I got yanked a lot. In golf, if you're on a downward trajectory at hole 6, there
You're
is
done.
nobody behind you,
Nope.
right? You've got to figure out how to turn it around in your own mind and not spiral out of control. There's this release mechanism in baseball, whether you're a hitter or a pitcher, you just get replaced if it gets too bad.
It's very true. It can be a long day if things don't go well in golf.
That's right. Ann, I could talk to you about this stuff all day, but I want to be respectful of your time. Thank you for spending a little bit of it with me here. This is a really enjoyable conversation for me. For our business owners out there who need frequent, proactive accounting work, where can they find you?
Yes, so check out our website, thelargogroup.com. We offer free seminars. We're actually starting this summer a 7-day to weekly accountability challenge. It's a free challenge to introduce the idea of weekly accounting to business owners. So I encourage you sign up. It's interesting. It really can help. But yes, very much appreciated the time. It was a great conversation.
Well, thanks again. I look forward to staying in touch and keep up the good work.
Yes, thank you very much.
Thanks for tuning in to Grow Money Business, the podcast dedicated to helping business owners grow both their wealth and business on their own terms. Be sure to subscribe to the podcast on iTunes, Google Play, or wherever you digest podcasts to ensure you don't miss out on future episodes and announcements. And feel free to submit questions to growmoneybusiness.com.